Welcome to Logistics Business Conversations, where we talk with key spokespeople in the logistics industry about topical issues. Hosted by Peter MacLeod, editor of Logistics Business magazine.
Good morning, good afternoon, good evening, wherever you are around the world. Welcome to Fleet Insurance, Strategies to Control Rising Costs, Episode 1, Season 2 of Logistics Business Conversations, brought to you today by Samsara. My name's Peter MacLeod, I'm the editor of Logistics Business magazine, and it's my great pleasure to host this conversation. In the logistics industry, fleet insurance is one of the major costs for any organisation. With claims cost inflation, parts shortages, and rising costs of vehicle technology, insurance costs are rising, meaning it's ever more crucial to have a robust risk management strategy to help to control costs. I'm delighted to introduce to you today two experts in that field. Dan King is Motor Fleet Portfolio Manager for Business Insurance Specialist, QBE European Operations. Welcome to the podcast, Daniel.
Thanks, Peter. Thanks for having us.
And Dan's joined today by Jack Burton, Insurance Partnerships Lead at Samsara, the connected operations platform. Welcome also to you, Jack.
Hi, Peter. Thanks for having us.
You're very welcome, both of you. Now, let's get underway. I want to ask you, Dan, first of all, just give me a brief overview of QBE and what it does to those who may not be familiar with your company.
Yeah, of course, Peter. Good morning, good afternoon, good evening. I'm Daniel King. I'm a portfolio manager for QBE. I've been at QBE for 15 years. I appreciate some of you may not be familiar with who QBE are. So we are an international insurer and reinsurer with presence in over 27 countries around the world. Across the UK, we have regional offices in 8 regions, including London, which is what I'm responsible for. Our fleet portfolio is fairly broad. We'll write everything from cars all the way through to vans to bus and coach, with a main emphasis around the transportation sector.
And Jack, tell us please a bit more about Samsara.
So Samsara are the pioneers of the connected operation cloud, and what that actually means is we bring all of the kind of operational data and insight together into a single platform. So anything from fleet safety to telematics with AI cameras and right the way through to workflows, tachograph compliance, and also how to kind of surface ESG data. So essentially the idea being that it's a single pane of glass which you can manage your entire fleet operation.
Okay, fabulous. So we know who we are. I just want to get straight into this. So we're going to talk today about how businesses can reduce the cost of insuring their fleets. Starting with you, Jack. Can you please tell us how Samsara can help fleet managers improve their operations and reduce costs?
Yeah, absolutely. So whenever we talk about Samsara and insurance, we always kind of break it down into 3 key categories. So it's risk management, claims, and data. Right. So from a risk management standpoint, it's understanding through data where risk lies within your fleet. Is it at a vehicle level, manager level, depot level, etc. From a claims perspective, it's being able to obviously cameras, great tool for liability determination and claims defensibility, but also how we can surface that sort of FNOL, that first notification of loss, and push it through to a claims handler or a TPA or whoever it may be that the fleet uses for claims management. And then finally, data. How can the data that the Samsara platform surfaces help you and perhaps your insurance broker, for example, to better sort of place your risk or to better tell that story around sort of safety and those actionable insights that I mentioned to an underwriter or an insurer such as QBE?
Which links me nicely back to Dan. I've got you both here on the podcast today. What is the bridge between your two businesses, and what's the relationship that exists between Samsara and QBE?
Yeah, thanks. Samsara is one of our preferred external providers that we use. I think it's fair to say when we talk about data, and that is what we would emphasize with Samsara. It's quite early in its stages, and I think we're still learning around what that data is, how we use that data, how we interpret that data, and then how do we take that data, overlay it with claims or potentially in the future with our pricing. So it's definitely a start of a journey. And we're working closely together at the moment to just understand how we can look at those particular points and help customers moving forward.
So the data side of the business is, I guess, as you say, in its infancy. But you've had a fairly long relationship already with Samsara. I mean, how do you take that data, and what can you use it for?
So there's different points of data that we can use. So whether that's from idling, from harsh braking, acceleration, and we can take that data, we can look at it at a holistic level, at a policy level, or potentially at a portfolio level. We can overlay that with claims data, then we can start interpreting it to understand if we had that data in advance, would that claim have happened, or was there steps that we could have introduced, be it through risk management or claims intervention, to ensure that the claim might have happened, but there might have been steps that we can take to reduce the cost of that claim or the defensibility of that claim. So, like I say, it's still quite early in its infancy. So, we're still learning. I think the industry in general is still learning around how it can use data more efficiently. I think it's historically, you use claims experience and you're always looking in the rearview mirror. So you're always looking at what's happened rather than what potentially might happen in the future. So it's now just understanding how you can interpret that data better to understand risk more effectively.
And Jack, so the data is being collected from vehicles nationally, globally, I guess. Is that used for purposes other than just to help understand how risks arise and can be overcome?
Yeah, I think traditionally with telematics isn't new, and telematics as a kind of standalone it certainly isn't new within the insurance industry. It isn't new within sort of motor. I think what Samsara are doing differently there is combining that telematics data with multiple other data sources as well, and other data points. So traditionally you see kind of telematics data being your harsh braking, your harsh acceleration, and your harsh cornering, right? So that's 3 data points. Now, ultimately, the challenge that you have there is actually, for example, harsh braking could either be very bad driving or actually good driving. It could be, a child had stepped down in the road and you slammed on your brakes to avoid a collision. And ultimately, what we're doing, or where we're taking that additional step, is we have obviously AI cameras looking at both road risk and driver risk. So it's combining the data points from the telematics device with the data from the AI cameras as well. So to understand the kind of context behind it. And I think, context is obviously, a key point there. So when you see a harsh braking event, actually what was going on and what led up to that as well. So understanding that. So in terms of that relationship with QBE, historically it's largely been driven on a risk management standpoint. So in terms of how do we kind of work together to help to sort of improve the way in which a risk performs. So as Dan says, there's potentially all sorts of exciting things that we can do in the future through data together, but at the moment it's very much working in close collaboration with the risk management team at QBE.
Whenever I talk about data, and particularly within the logistics sector, it always arises that there's just so much of it there, and I think there's some well quoted numbers about how little of it is actually read, let alone interpreted. So from your side, Dan, what sort of data is valuable? How much of what Samsara is producing and recording and measuring, how much of that can you then take, and what are the elements of that you'll be looking for when you talk about assessing risk?
Yeah, I mean, the easy answer is all of it. It's for us, it's about having that data, being able to interpret it, understand it, then taking it back to, what do we want to do? We're looking to support the end customers. We're looking to improve risk. We're looking to identify trends in risk, support driver training, and most of that will come through what we can offer from a risk management perspective. So it's linking in with Samsara, with Jack, for them to interpret that data for us, give us an overview of what that's telling us. We can then link that back into more of an underwriting area, and then linking it into our risk management teams, and then coming up with remediations that we can then take to the end customer to, A, give them insight into what that data is telling them, and B, then putting in plans in place to hopefully remediate and improve their risk.
So let's not lose sight of the title of this, strategies to control rising costs, specifically around insurance premiums. So you take that information and you can then you can make an assessment of the risk that business presents. So it's not always based on past performance or past incidents, I guess. I presume there's also you take on board the opportunity for that business to train its drivers and to implement a risk management strategy. And does that also affect the premiums?
There's more than one way for an operator to make efficiencies to their business. So insurance cost is one of them, and totally understand that, particularly in the market we're in at the moment, we are seeing prices rise for a number of different reasons. I suppose that's one element of where we can make savings, but QBE, we try and think more holistically around how we can help that operator, how we can help that operator save money across their operation. And insurance is a big part for that. It's probably their one of, if not their largest insurance spend that they would have. But yeah, there are ways that we can certainly help improve and make savings to their business.
So, Jack, the data you're capturing, there's a happy byproduct in as much as your customers will be operating safer, more efficient fleets, and there's also the bonus that their costs will come down.
I mean, I think there's always the potential there, but it's really about kind of implementing a robust risk management strategy that surrounds that, right? So, for example, I mean, with Samsara, we're not a company that kind of sells the technology and then moves on from the clients. We have a full implementation team and a customer success team. So where we can work with QBE, for example, in terms of that, is that collaboration through data. So, for example, it might be a case of looking at the 5 most common causes of claims for that fleet over the last kind of 2 or 3 years, and then tying that to a feature or functionality of the Samsara platform during that implementation piece. So, then looking at what's cost the money in the past, what's continuing to be a challenge for that fleet, and how can we address that. So, for example, if the fleet was having a lot of rear end third-party collisions, driving into the back of other vehicles, then maybe a case of enabling the features and functionality of our AI cameras to alert the drivers to things like tailgating, right, which can provide that feedback to the driver in the cab to change that behavior. So we're taking a more targeted approach to risk, and with the implementation of technology, that may then have an influence on the frequency and severity of claims, which could in future lead to better pricing for the fleet.
Yeah, Jack makes some great points there. I suppose a key thing I'd just like to get across is that this needs to be a tripart relationship between Samsara, QBE, and the client. And some of what we would look to try and implement here isn't going to happen straight away. So if you look at a lot of the operators that we would manage, particularly some of the larger ones, those relationships are going back over 10 years. And sometimes it will take 3 or 4 years to implement a plan to really start to see that coming through in the performance, be it from the claims or from an operational perspective. So, whenever we're speaking to a customer, we're always looking to, we're looking forward, we're looking to put that plan in place. We try to break everything down into bite-sized chunks so that we're not trying to go at everything at once. Jack talks about claim trends. Probably the 3 biggest challenges for us, particularly in the logistics sector, would be third party and rear, changing lanes, and hit a mobile property. And those 3 trends will just depend mainly about where those vehicles are driving. So if they're more inner city claims, then it's likely to be more attritional. Look, you're going to get vulnerable road user claims and cyclist claims. So, that is a definite, but that will be more around those third party, hit a mobile property, hit third party vehicle type claims. You then go to more A to B long haul type trunking work, where you're probably going to see more of the severity. And that's where you would see those hit third party in the rear claims and those changing lane claims.
Maybe I'm a little bit blinkered, but I don't really know what a risk assessment looks like in this. What a strategy would look like. So I'm thinking purely vehicles on roads, but I imagine it extends beyond that. Maybe Jack, you can tell me a little bit more. The depots come into it. Does the maintenance of the fleet come into it? Are there other aspects when it comes to minimizing risk that you look at?
Yeah, I think from Samsara's perspective, I mean, obviously, we're not here to provide that sort of full risk assessment. That's something that would most typically be done by the insurer, so by QBE. But from our side, where we can help to support there is, by uncovering those trends through data, as I spoke about a moment ago, but also just to kind of go back to Dan's point there, and I'll let Dan take the kind of question around what a risk assessment typically looks like. But I think very much, just to kind of go back to the point around partnering for the long term and how key that is. So, typically with Samsara, we look at a sort of, between 3 and 5 year agreement with our customers. And, in the same way that sort of longer term collaboration with an insurer, with QBE, for example, there is key to that. It's not something which you can implement and see that drastic change overnight. So just to echo kind of Dan's sentiment on that point, but also, that ability to work together for the long term and sort of build for the long term on a robust risk management strategy with the client. So perhaps whether it's like a 3-year long-term agreement from the insurer to align with our typical contract length, can really help us to show more value in that tripartite relationship that we have with the customer and QBE. But Dan, I'll let you kind of frame what a risk assessment looks like.
Yeah, sure, fine. Yeah, I mean, so I suppose if I take it from a new customer lens, so in most cases we probably wouldn't have that data at day one. So we're going to be very much reliant on the claims history and the detailed claims listings that we're provided by the customer and the broker, which will give us trends, so we can see whether the type of incidents they're having, how quickly they're reporting claims, is there a trend in the drivers, etc., etc. So we would take that information. We would then engage with our risk management team. So we have something called an RMEQ, which is a risk manager essential questionnaire. So that's an online questionnaire that we would ask the customer to complete, and that will give us a series of answers around the type of processes that they have in place, and then we would score it based on their feedback and answers. Even for the customers that think that they've got the best risk management process in place, there is always things that you can do better. So depending on the severity of the responses that we get, that might be a virtual conversation with the client and a plan put in place. For those that probably need a little bit more handheld holding, or there's they may have a distress claims experience, or that might involve more of a face-to-face conversation, and then that's where we would link into Samsara with a recommendation for whether it's around their AI technology, cameras, telematics, whatever it might be. Then we would bring them into that conversation and then look to see how we can utilize their technology then to improve that risk, and then we can start using that information and that data going forward to analyze and support that customer.
So the sort of the assessment of the risk is an ongoing affair. I imagine once you've made that score and decisions have been made about where the areas need to be improved, you'll work with your clients to then bring that score back up. And obviously the end result there is safer, more efficient fleets.
It comes down to the complexity of the customer. We could be working with a haulier that's got 5 vehicles. We could be working with a haulier that's got 1,000 vehicles. It could be a standard conventional policy with a £1,000 excess. It could be a non-conventional policy with £100,000 excess. So we tailor the solution based on the customer and their understanding of risk and just how much risk they're prepared to take. So, for a risk where they're going to go on a self-insured policy, for every pound they say through risk management implementation and savings in claims, that's going back into their pocket. That's not coming back to the QBE. What we're doing on that type of program is we're trying to avoid that catastrophic claim and understanding how that, when and how that might happen, and the processes that they could put in place to minimise those claims. So it comes down to the individual customer and tailoring it to their needs.
The entire time I've been reporting on the logistics industry, the conversation has always been, when we're talking safety, oh, I can't afford to do that. And then the response has always been, you can't afford not to do that. Jack, in your case, you're not exactly selling a physical product. You're selling a way that businesses can run better by making themselves more aware of some of their shortcomings. Now, how do you demonstrate ROI when you're talking to businesses about getting on board with Samsara?
Yeah, really good question. I mean, and everything we do is we kind of take that kind of value-based approach to selling, if you like. So, first off, we start by providing the customer with a demo of the platform, so they'll get a chance to kind of see what it looks like in the flesh. And we always use, another real fleet as an example there. So no kind of demo or test accounts. We kind of show the platform, warts and all, to make sure that the customer's fully aware. We then typically run a trial as well with the fleet, so they actually get the chance to try it out in the vehicles, get that kind of driver buy-in, get drivers used to using the platform as well. And then from there we can capture some really kind of powerful data, so we can start to look at things like fuel usage, anticipation, idling. So from a fuel saving perspective, there's obviously a key part there. And then also kind of going into the safety side of things. And often, what we do in that process is we surface, insight, and a lot of the time it's, what you don't know, you don't know. And by giving fleet operators the insight into what it is that their drivers are doing, what those potential sort of early indicators of risk are, that sort of helps to build out that ROI case for Samsara. So anything from consolidating the number of platforms you use, to fuel spend, to impacting the overall fleet safety. And look, when we talk about ROI, we often talk about insurance or fuel spend, and we're talking about pounds and pence. But realistically, at the heart of all of this, it's about getting drivers home safely, and I think that's a key focus for Samsara and what we do.
I think it's just really important that you get that engagement and you get that buy-in from the end customer. You speak to a lot of customers, and they think by just having telematics or cameras or AI, automatically their drivers are going to drive better, their claims are going to reduce, their frequency in claims is going to reduce, and ultimately their insurance spend is going to reduce. It doesn't work like that. You need to have that buy-in from the end customer, and they need to understand, it's as much about their behaviours and around how they're going to change the way that they understand data and risk, and how they play that back to their drivers and to the business. And like I said earlier, that takes time. It's not going to happen overnight. So that's where we need to come in, and and Jack and the Samsara guys we're there to support them. We're there to hold their hand on that journey, and we're there to guide them. We're there to give them recommendations.
Dan, when I look at the QBE website, you've got so many different sectors you're present in, and I suppose the one that you've landed in is it's very data heavy. You've got a lot of knowledge coming your way to help you make smart decisions. So how does your business differ, for example, from any of your competitors? I'd really like to know how you could be smarter than perhaps any of your other insurance competitors.
Yeah, I mean, you're right. Yeah, we've got a number of years, and the size of our portfolio. Yeah, we do have a lot of MI that we can use to understand risk better, and certainly probably over the last 5 to 10 years, we're starting to look more forward around what we need to do in the future, the types of things that we need to be talking to customers around. So yeah, we're starting to use that data more effectively. Things like FNO is really important, and that's probably the big thing that we focus on. So FNO is first notification of loss. So that's around understanding and knowing about that claim as quickly as possible. So ideally, you want to capture that claim within 24 hours. That way, you can capture the third party, or hopefully capture the third party, and avoid them going into credit hire, as an example. Because once they go into another network, you've lost them, and then it's very, very difficult to control that claims cost. So the quicker we can have that claim reported to us, the quicker we can capture that third party, get them into our network. We can then start controlling the costs, and then we can manage that cost through to its conclusion. So we can then take data in terms of understanding profitability performance across the portfolio. We can do benchmarking. So we're starting to look at risks and how they compare to similar risks of a similar size in the same type of sector. So look, we are fortunate. We have loads of data. We have a great actuarial and data science team that support us and give us those insights and that MI to understand risk more effectively. Don't get me wrong, there is a lot more that we can do, and we're probably only just touching the surface here. But what we're doing there, plus what we can do with Samsara around more to do with telematics data, it's really exciting about what the future is going to look like, how we underwrite risk. The way we underwrite risk in the future will be completely different to the way that we underwrite risk today. Like I said earlier, we are looking in the rearview mirror all the time. We're pricing based on what's happened in the past. Where we will eventually get to, I think, is we'll start pricing about what might happen in the future, because we understand risk more, whether that's at a vehicle level. So, ideally where we want to get to is we'll have a VIN level data, so we can understand that vehicle, the technology that vehicle's got, the safety features that vehicle's got, and then that just feeds back into our pricing at a vehicle level. So there's a lot going on. We're certainly nowhere near the end of that road, but it's really exciting where the future lies.
Indeed, exciting times, and I guess AI and machine learning will play a part of that. Jack, your Samsara has the ability to capture all of this data, but it is what Dan's saying. If you've got the opportunity to sort of look forward rather than back, and maybe anticipate some of the risks, does AI play a part in that?
Yeah, absolutely. I think we, obviously, as Dan says, and kind of echo that in terms of, the future, space here is super exciting. I think in terms of AI and how that kind of plays a part in the future of risk management and potentially insurance pricing there as well, is, from our standpoint at the moment, everything that we do is based around sort of improving the way in which, drivers perform, obviously kind of building those solid habits. And ultimately with things like in-cab alerts, which are triggered by obviously the AI detecting certain behaviors of a driver, it starts to kind of become more habitual. So, I mean, if you think, a few years back when you got into your car and you didn't plug in your seatbelt, for example, you wouldn't have received an alert. And then now you can't buy a car which doesn't have a seatbelt alert. I know that's a very basic example, but how many of us now, that immediate behavior change that you've probably seen over the last few years just from a seatbelt alert? So exactly the same with things like a tailgating alert, with, distracted driving, mobile phone usage, all of those sort of things. It comes to the point that, you see drivers start to reach for a mobile phone, they get that in-cab alert immediately, and it changes that behavior. So ultimately, like Samsara, aren't here to kind of price the risk of the future or anything like that. We're not an insurer. What we are doing is surfacing a huge amount of data. And as Dan said, obviously having those kind of actuarial teams within QBE and, being able to take more data and more data points with the huge wealth of data that the likes of QBE have within their business, hopefully we're playing a strong part in kind of shaping the future of risk as well.
And I wanted to just turn the conversation back a few minutes, Jack, if I may. When we're talking about, I don't know whether selling in is the right expression to use, but certainly approaching customers or potential customers with the Samsara proposition. What is your strategy there? Obviously, it's a convincing case from the fleet management level. Do you have tentacles that reach down as far as the drivers as well, in terms of getting them on board?
Yeah, absolutely. Look, and I think, driver buy-in to these sort of things is often really, really key. Ultimately, look, this isn't a tool to spy on drivers. We're not trying to be kind of big brother or anything like that. So ultimately, from a fleet operator perspective, the manager or the fleet operator is only getting those alerts when something meaningful or is captured. So that might be, that eating, drinking, smoking, tailgating, or even that sort of crash notification, right? So ultimately, we're not here to watch, drivers going about their daily business. And I think often there's a kind of misconceived conception that having cameras inside a vehicle is your manager or your fleet trying to spy on you and what you do. But I think we often forget that there's, cameras in every workplace, in every office, in every warehouse, and every distribution center, and all the rest of it. And realistically, from that side of things, I personally see it as no different. So, understanding and making sure that drivers are informed that this isn't a tool for spying and this isn't Big Brother is key. But also what we often see is how driver exoneration can play a really key part in this. When a driver's not at fault and the camera footage is able to kind of clarify that and ultimately perhaps even kind of serve as something to protect them from a fraudulent claim or perhaps even a fraudulent complaint from the public, right?
Just add to that, Jack. I mean, I think even when a driver is at fault, I think even when that camera footage just confirms that, it just allows you to just get on and deal with that claim as quickly as possible. There's just too many times where liability is in dispute, and you could be 6 months down the line, and it ends up getting settled on a 50-50 or even in a full liability basis. Whereas if you had that camera footage, you knew you was at fault or you knew you weren't at fault, you share that with your claims department, and they can just get on with that claim and just get it settled on the best possible basis.
Yeah, that makes a lot of sense. And I guess as the technology becomes more widespread, then the acceptance levels will be very, very high as well. Well, the clock ticks on remorselessly, and I note that we're reaching the end of our allotted time. So I just wanted to say, maybe to finish off, I want to ask each of you, sort of in summary, starting with you, Jack, what sort of actions can you say in summary should businesses be taking today to help reduce cost, and in particular insurance costs?
Yeah, look, from my side of things, especially in relation to technology, it's about kind of understanding, what value are you getting from the data that you're currently surfacing within your fleet. So, as I said earlier, telematics is not new technology in the commercial fleet space, but how are you using that data? Are you getting the value from your current offering, and what more could you be doing from that side of things? The other side of things for me in terms of insurance costs specifically, is work with a proactive insurer who's looking to sort of actually assist you in managing the way that your risk performs, and combine that, going back to the point earlier, with a sort of tripartite partnership between technology and insurance.
A proactive insurer, Dan? I think that sort of throws it over to you. What would be your sort of takeaway? Or if you've got 30 seconds in an elevator with a fleet manager, what would you be saying to that person to say, this is the easy way, and this is how you could make your costs reduced? Yeah.
So look, ultimately, you need to have that buy-in from that operator to understand this is an investment. I get it's an upfront cost, it's a lot of cost, and you've got the cost of insurance, but it is the long-term investment, and that one single camera footage could save a significant amount of money and pay for those cameras for a number of years just by having those installed. For us, look, we're looking to support customers where we can. We're looking to use data to, understand risk more effectively, for us to be able to price risk more effectively, to educate customers more effectively, and give them that added value proposition from a claims risk management or an underwriting perspective. So, as I said earlier on, we're excited about where data's going, and we're on that journey as much as anybody else. Working with Samsara gives us a huge opportunity, an advantage over the market to be able to take advantage of that. So, yeah, look, I think we're in a really good space. I think we're excited about what the future holds from a data perspective, and look, we're here to support and work with customers going forward.
Gentlemen, you've shared some great knowledge at a time when businesses are feeling the pinch from all sides. So it remains for me just to thank you both, Dan King from QBE and Jack Burton from Samsara, for your time today. Thanks, gentlemen. And thank you also to Samsara for sponsoring today's podcast. So I just want to thank you also, the listener, for tuning in today. Look out for the next edition of Logistics Business Conversations, wherever you get your podcasts. Until then, it's goodbye from me, Peter MacLeod. Goodbye.